Insight into auditing. What is auditing? The word auditing, derived from Latin word audire, which means to listen. Definition of auditing refers to a systematic examination of financial statements and related records of an organization. Auditing is conducted by an independent and qualified person, with a view to express an opinion on true and fair view presentation of financial statements of an organization. Let's discuss in detail with some pictorial description of definition of auditing. Investors invest money into business or company with expectation of return from the investment. Company is operated or managed by a team called management. Management acts as a steward of the company and resources invested in the company. Company reports its financial result in the financial statements, in which either profit or loss has been presented. Reported financial result, that is, profit or loss, is the return for the investors, which can be distributed in the form of cash or stock dividend or increase in reserve. However, investors are not sure about the true and fairness of figures presented in the financial statements prepared by the management. Investors might have dilemma regarding correct profit, correct financial position, true and fair presentation of financial statements. That's why investors appoint an independent person as an auditor to examine the financial reports and records prepared by the management. Auditor systematically examines the financial records and statements prepared by the management in order to check true and fair presentation in the financial statements. Auditor is expected to provide an opinion on the true and fair view presentation by the financial statements. After completion of audit, auditor provides an audit report that includes the auditor's opinion on the financial statements. Objectives of auditing are: 1. Expression of opinion, which is also called primary objective of auditing, because audit is all about providing reasonable assurance on true and fair presentation of financial statements. 2. Detection and prevention of frauds and errors, which is also called secondary objective of auditing, because of its priority during the course of audit. Management is primarily responsible for development and implementation of internal control for detection and prevention of frauds and errors. However, auditor needs to be cautious about the possibility of frauds and errors and its detection. In a nutshell, we can say that auditing is a systematic examination of financial records and statements. Auditing is conducted by an independent and qualified person. Auditor provides an opinion on the true and fair view presentation of financial statements.
Thank you for watching. For more videos, hit subscribe button below.